Alrighty, Doc here from North America and SC and Robin. Hello. And I did my homework. I did. I promise you, I did my homework. So we have an options chain this morning. And let's see if we can get it up. Oh, what am I doing there? Clicking on the wrong thing. There we are. And we have our options chain this morning. But we'll start off with the dollar index, but I'm going to show you. Matter of fact, maybe I'll put the dollar index in there and you can see an option on it. That sounds like even more fun. You can see here, the dollar is backing off a little bit today. Let's see what the hinky looks like on that. Let's move that over a little bit more like that. There. Can move it even more, like so. Oh, what's that? Initial jobless claims, 204,000 versus 217,000. Stock market's a little firm this morning. It's nice. The Dow is up about 72 points. S&Ps are up 10. NASDAQ up 22. So, markets are kind of quiet and happy. Let's see, where am I heading here again? Oh, yeah. So there's the dollar index. Let's go to J4X and get the Hinky ASCII going, too, at the same time. There it is right there. So they're all green in here. But you can see, the actual bar itself is breaking down at the moment. And you can see that same situation going on. You see it over here. It's breaking down, still has a green dot. And then when we slide one step further over to our other platform, we take a look at that. We show you, where is it at? Right there. Oh, window. Window, window, window. There it is. And you can see the same thing happening right there. That topping out and then starting to break. Something seems a little odd about that, but we'll let's see what we can do about changing that. Maybe it's again all these magical data feeds and different drives me crazy. Certain times of the day, once they give you a certain amount of data, new data comes in. It's like me a break. There we go. Okay, so that is yesterday, like that. That makes more sense now. And then when we go like this, watch this. Then I'll go and just put the 27-hour in again, or 24 hours, 7-day a week in. It'll be like, well, it should show us the next tick. We should get another, the next tick will show back out where it's just like that, heading down. So, there it is. There's the next tick, and you can see it now. It's heading down a little bit. It's still in the buy though. And that weekly buy still in the buy. Nikkei TV was showing that information. Now let me just shrink this down for a second and let's go to the options. Now you're gonna love this. There we go. I was so happy. I was looking and looking and looking, and I was trying to dodge having to sign in through a separate platform. But again, the exchanges do their best to hide all data and send it to the brokers, who then allegedly, we're going to give you the truth. Like I said, when you're trading options in the futures, there has to be a warning that it's run literally by criminal elements, and that the bid and offer can be extremely ridiculous at times during the trading day. And whereas at least on the Securities Exchange side, compared to the Commodities Futures Trading Commission, they at least enforce bids and offers. In other words, an example would be is that we could put a live chart up there, and you'll see that they'll be bidding, say, 50 for a futures option, and the next thing you know, they're bidding 24. That's a dramatic move, and the difference could be literally, $3,000 or $4,000. And if you accidentally sell the wrong thing, supposedly the brokerage houses are working at trying to stop that. But when you have, like I said, a criminal type organization like the Commodities Futures Trading Commission that literally doesn't enforce its own rules, you don't have much room to deal with that, because they are the police. So if they want to be on the take, they're on the take, and there's no controlling them. And I fought with them in the courts about it. They just tried to eat me alive. So And the end result is that so future options are really dangerous to play with. You need to be very careful, and we'll teach you how to use them. But overall, now let's see if we can get the dollar index up there. That'd be kind of neat. Let's see. Is there a ETF to it? Or let me think. Is there a dollar ETF? Let's look and see if there's a dollar ETF. Because if there is, we'll put the dollar ETF up there, and we'll look at some of the prices. Now, the markets are not open at the moment. And you can see, but at least let's do this after dragging. Okay, yeah, okay, good. All right, so here is the strike price right there, coming down. I wonder if I can highlight all the strike prices. No, I can't. So I guess I can highlight. That doesn't let me highlight anything. All right, so all the way down here. Let me just check one thing first, though. I want to see if there's a dollar index that we can put up there right now, besides the futures one, because that'll be out of whack like galore. Let's see, dollar index options. Let's see what happens when I do that. Yep, wrong place. I guess I put it. Dollar index options, copy. Let's try that one more time. And punch that in again. I think there's an ETF out there that we could look at, and that might have the options. And since if it is an ETF, it's controlled by the Securities Exchange Commission. At least it's it's legitimate on the sense of bids and offers and so forth. It's well more legitimate than the future side. Let's see, nothing's popping up. Price Cultural McLean. How about a dollar index? When you type in dollar index, come on, dollar index. DXY, that's the futures contract. Let's put it in anyway just to see what happens here. See if we can get the symbol in there. DXY. No, that's not it. Try it here. DXY. Let's see what that does. Do they put T in there or Y? Let's go back one and Y. Okay, let's see what that is. There's Dixie N. See, it wants to do it as a stock. Let's see if there's an ETF for it. That would be nice. Dollar ETF, Dollar Tree, Dollar Canadian DXF, Dollar. Let's see, Dollar ETF. Let's see if that does it. USD dot beta share dollar ETF. Okay, let's see what that does. USD. Let's try that. USD ProShares, USD Partners, USD Ultra Short Income, US Dollar Canadian, US Dollar Swiss, US Dollar. Let's keep on scrolling down. At least they got some currency thing going on. That's cool. Let's put the euro in there. Did I see the euro? It must have been. They must have the euro in there. Where's the euro? There's South African rand, Turkish lira. I didn't really go look to see. There's gold. I wonder what happened. Let's put gold in there. Let's see what that does. Let's see if they're going to give us options. That would be cool if they gave us options. They're showing us the index here. Right there. Okay, so in other words, all right, we'll do this. Let's just put Apple in there, because we know that's the biggest active stock in the world. Let's get some light over here too. So there, what they're showing is the delta right here. They're showing the volume right there. Open interest right here. We can control these things. There's the bid and offer, but there's no market in it at the moment. We're gonna have to find products that we can show during this trading time of day. So, let me go back to the chat line too. Okay, there it is. Doc, are you saying that the options have more intelligent collections elements to it? Yes, that's what they call the Greeks. So in other words, the delta represents. Let's talk about that this morning. Let's look at some of the. First of all, I want to get an example up there where we have some price action where we can show it, and they're not showing you that because of the it's not open yet. So let's see if we can get the S&P minis in there. Let's try this. What's the symbol for the minis? Let me just go look. MES, that's it. Let's see if we can get the future in there. Even with the junky markets, it's better to have some bid versus no bid. Let's see. Let's try this. S&P 500. Wonder if that'll give us some quotes. Doesn't even give us a chart. Let's try this again. SPY. Let's see what that does. And they're not giving us any quotes. They're just giving us yesterday's action. Now, let me see if we can find the futures. Let's see if I can find a way of putting a future contract on here because they're trading 24 hours a day. That's why I pay attention to them. So George says, hey, UDN is bearish dollar ETF. All right, let's try that. Was that UDN? No, it shows the chart, but it's not giving us the options. But there are definitely options. They're just not trading. You can see, unfortunately, the illiquidity of it. And let's scroll down a little bit more. Where's that scroller at? Okay, so it's showing you the October 23s, November 23s, and December 23s. So that's not too bad. But again, let's see if we can. I would love to be able to get a futures contract in there that actually shows quotes. Even with them being bad quotes, I'd be able to show you premium. What they do is on the commodity futures side, by the CFTC, they give you legitimate quotes at times. And what I mean by times, like in minutes and seconds. Sometimes they actually give you the accurate quote. Then they turn around and give you an inaccurate quote instantly. It's amazing. There's no governor, I guess you could say, like on an engine. They let any junk fly through, and the bid. Once a bid disappears, they go look at the next bid. If the next bid is $50 lower, not 50 cents, $50 lower, they show you the bid. And what happens if you send a market order accidentally at the same time? You get your head handed to you. So let's see if we can. Let's see, ES. No, not there. Let's try this again. ES. Let's see if that will show us the futures. Wonder if I. Oh wait a minute. What was it down there? Invesco S&P ESG ETF. Let's see what that does. See if we can find something that's traded. Oh God, that poor thing doesn't even have liquidity. Look at the chart. The chart looks horrible. So let's see if we can find something to put up there that's live. I wonder if I can put US. In this case here, it'd be EUR. EUR. Right there. Let's try that. Now at least the chart makes sense, but they're not showing us the options. I'll have to hunt down the symbols for the options. Let's see what we can find the option symbols. I found a platform at least during the trading day. I didn't really think about. Let's see, trading. No thanks. Service required for this action. Okay, no thanks. Library. No thanks. Alerts, notes, watch list. No thanks. Charts. No thanks. No thanks. All right. put the options up on this. There's a symbol for it. Let me find the symbol for currency options. I have to go to the CBOE because they have the options. They bought them away from Philadelphia. Let's see, euro cash options. Let's see, currency option definitions. Good. Let's get there somewhere. So let's see if this will do it. Trades like U.S. currency option trading for several reasons. Blah blah blah. Call options, put options. Blah blah blah. Shot example. Give us a symbol, guys. Let's try this. Do options trade in PhilX? No, they don't. Let's see. Let's see if we can find the symbols. Currency option symbols. Let's try that. I think we got something here. Hold on a second. Okay, options to outperform options architecture. Contact. Foreign currencies. Articles. And let's see. We'll find something here. But at least we have a platform now that can show options and bids and offers. We just have to find a product trading right now that does that. That's the problem. Let's see. Market activity, solutions, NASDAQ Plus, dashboard. Let's see if we can go back to that symbol thing again. Currency options, types, features, currency cash tips, three reliable ways, the euros, foreign currency options. Let's see, where's the symbols at again? I did see something that said symbols. Symbols. Euro symbol. Code for is EUR. Greek. Let's see what happens when I does that right there. Let's try it right there and see if I do that. EUR. Oh, no, that's not it. EUR forward slash. Nah, they don't want to put the options up there. They're probably making a quote somewhere, let's put it that way, but they make it very hard to see it. Let's see, edit, no. And they're not giving us like a 24-hour thing. There must be a way of seeing the futures in this thing. S&P 500. 500. Future. Nope. Let's see if I got one more way of trying to look it up. Yeah, unfortunately, that ETF is not trading at this time of day. During the day, there'll be quotes after the webinar's over with. See, they make it very, very hard for anybody to have an opportunity to trade these things. You have to go through a broker so the broker can control it and sell you something. But what's the exchanges there for? Euro currency symbol. Let's see if we can do this. Fill X. See if that'll do it. Maybe it's left in the old system. I think I found something here. $ECU, $ECB. Let's try this. $ECB. Well, that didn't work. Let's wipe that out. $ECB. Let's try that again. $ECB. No, it doesn't seem to be lighting up like it recognizes anything. How about if I go euro? I go $, it's showing something. I see Dow Jones transports. Imagine if we run across a currency in here, this might spit out. Amex Corp, Amex ticker, NASDAQ. Let's see if we can get anything. Doesn't even give us a chart. All right. I should have realized during the trading day and pre-market, two different animals. Talk about, that's why I always call it like criminal the way they are. I mean, why can't we get just basic data? They control it. That's why. This way somebody can sell you something. Let's see. EU. Nope, not there. EUR. Let's see if I do that right. See, it's not. It's in the option box too. Any symbol, watch list, look, lock to symbol. Let's see. No, that's not doing it. Nah. All we can do is see the currency, and you can see that this morning it's trying to bounce up. You know, is it really at that price? Let's just take a quick look. Let me go over to the euro. Euro this morning's trading at where is it at? It's trading at 105.31. I'm not sure what that chart is trying to tell us. It's at 108.85. When was that? It says September, but I don't see that at all. So, all right. So let's go back to just something as simple as let's see if DXY. Oh, not there. DXY. Let's try that again. DXY slash. No, that doesn't do it. Let's put a $sign in there. Maybe that'll do it. DXY. Love to find a currency trading. No, not that either. All right, let's go back to the stock. We'll talk about parts. I will figure this out. I'm not going to give up. There's Apple. All right, we know that. You know, that's the. There's the September contract which expires in 1 day. Then there's an 8-day one right there. There's a 15-day. And I believe they even have shorter term, like a 3-day. See, and show, they're just reflecting 8-day. Okay. And let's just go like this: 1 day. No, not strikes. All right. So basically, what you have is you have the stock trading at 170.43. All right, so we look at the 170. That's the call right there. And we can do calls and puts. They're not giving us a bid or an offer, so we don't know what the premium is, so you can't trade it. It's telling us the delta is 15. Let's see if I can put in where it closed last night. Add a value column. Let's see, last. Price. Let's put price in there. Okay, there it is. So let's move that price to the delta. We can use that as an example. All right, so there's price, and there is delta. All right, so now we're looking at, let's look at the 170 call. Let's discuss that, okay? Everybody all right with that after me going crazy? All right, now the 170 call means that you can call it away on today, because it expires today on the 28th right there. It's a one-day option. They have one-day options. And tomorrow there'll be, oh, wait a minute. Let's look at that a little bit closer. Or is it the 29th? I think that's 29th. It expires tomorrow on Friday. So it's the September 23, and it expires the September 23 calls. It expires tomorrow. And what it did is it settled last night at $1.81. Okay? Now let's give you some mechanics of it all. See where it says delta? What delta does when you're looking at an option premium, all right? You know, there's the bid and the offer. What it's saying is that it will move for every penny that the stock moves, the option will move. So in other words, we'll give you a simple example. It says 1320 right there. That's where it closed last night. That is, let's do a round one, okay? So in other words, the 160 call, we're going to highlight, excuse me, we're going to highlight the 160 call. And so we can learn something here. I can teach you some of the mechanics. So 160 call, last night when the stock closed, let's see where the stock closed at last night. It closed at, and let me just double check down here too at the same time. Let's get rid of that. And get rid of that. And then let's go to, let's see if we can see where it settled. Apple settled at, let's see if we can put that up on the screen also. It's around here somewhere. I just saw it. We'll find it. It's just a matter of time. There it is. So Apple last night closed at, let's emphasize that, like this. It's settled at, okay, here we go. We're gonna do a split of this. We're gonna shrink this down a little bit. And I guess no, you know what? It's the same thing, so that's good. We don't have to shrink it down. That's where it settled last night. It settled at 170.43. Okay. All right. Now, let me just double check something where it's trading at the moment in the pre-market. And Apple stocks is trading at 169.68 right now, down 75 cents. Okay. Now, here is the 160 call. And the stock closed, you can see it right here at 170.43. So, you take 1046, add it to 160. That comes out to 170.46. So it closed with a 3-cent premium. Okay? Just a 3-cent premium. Matter of fact, which is, let's see. If we add another strike price, let's go to a 65. So, let's see, one more. Or maybe they don't have them. They just have the, I guess they don't have those strikes. Okay. All right, so the 160 call, or here's the 165 call. The 165 call, you put $5.65 on top of 65. And it comes out to be 170.65. It closed with 65 minus 43 is 22-cent premium. Okay, the 22 cents is the premium, but that's the extra. That's volatility and interest rates and combination of decay, the whole bit. It's like a bond. Now it's going to expire tomorrow, and so they're saying that they want if they're going to sell that to you, they want to have 22 cents more than what it's worth. It's really worth when you see that it closed at 170.43. It's simple math, just add and subtract. You can subtract 165 from 170.43, and that comes out to be $5.43. Okay, but the option is $5.65 because they're concerned. And here's another one. Here is, you can see the current the stock closed at let's say the 170 strike. It closed at 70.43, but the option is $1.81. So you take 43 and subtract it off of the $1.81. So that's $1.38. That's the amount of premium they're saying that the chance that it can move. Now let's show you some magic. Let's put the put in there, or put both of them in there like that. So right now the 170. Yesterday's close, the 170 put closed at 132. The 170 call closed at 181. You add those together, that is $3.23. Or it was, no, wait a minute. 132 and 180, that's 13 cents. $2.13. Right? Yes. So 81. Yeah, 13, exactly. And so, be 113, 103 would be, I don't know why my brain is unsyncing, but in the end result is that 181 plus 132. It's just, use a calculator for some reason. My brain is jumping around. I guess I'm talking and thinking at the same time. 181 plus 132 equals, 313. Okay, so 313, what did I say, 213. So it's 313. So when you look at the 170 area, the strike price, you subtract it and you add it, so that they think the potential is that it could go to 173.13, or subtract it and it could go to 166.87. And so this morning, the stock is trading at last trade is 169.70. So we're saying that the options are telling us that it has that much volatility between now and tomorrow expiration. And that's what that's telling us. Okay? This is just a simple concept of understanding the range and how people look at options. Traders look at options. All right, now, the delta represents how much an option premium, the bid and offer, will move relative to the underlining. So in other words, in the case here with the 160, it's at 1046 and it says 100 delta. So in other words, if it drops $1, more than likely it will be 946. Does that make any sense to everybody? What is the margins? That's a good question, and it's relatively simple to describe. The margin is usually 20% of the stock, and it depends on your broker and how much capital you have in the account. But you can reduce the margins, and I'll show you how. What happens is that, imagine if you're selling the call spread, or let's say in this case you believe that the pricing of the 170 call and the 170 put at 313, okay, you believe that that's pretty much where it's going to end up between today and tomorrow. And we can watch this. Tomorrow we'll come in and see where they're priced, and then on Friday and on Monday we'll look and see where they closed, and we'll be able to see how it all played out. Okay, and so now what you could do is, let's say you bought the 160 put. Let's put that up there. There's the 160 put, and it's settled at 6 cents. Okay, for 2 days, and the 165 is at 11 cents. So it's only $5, or 5 cents. And if you sold that, you would be risking $4.95. Okay, now we're going to take this a little bit further, because let's go and look at the same thing out 100 days, or let's say 3 months. Okay. Let's say that's 78 days. That's 3 months basically. All right. So now let's look at where is it at? It is the December contract. Okay. 3 months out. All right. Now we look at the 60-65 spread. Basically, it is trading at $1. Maybe I should write this stuff down too, so we can go back and forth on it. It is trading at $1. So we take let's highlight both of them. So right there, see how I do that. I thought I was able to highlight them. You can see the 160 put is at $3.97. And the 165 put is at, right below it, $5.38. So if we buy the 160 for $3.97 and sell the 165 for $5.38, okay, that comes out to be $1.41. All right? Let's remember that. Everybody write that down, $1.41. Okay? Now, let's go and look at what the 70 straddle is looking for. The 70 straddle is the 170 call, the 170 put is at $7.30. All right, $7.30. The 170 call is at $6.25. That comes out to be $13.55. All right? So the market is looking at Apple right now, and it's saying it could go up $13.55 or go down $13.55. Okay? That's what the option traders think it could do. A lot of times they're very accurate. It's very amazing, but they are very accurate. Even when earnings are coming out the next day and so forth, they can be pretty close, only off. Sometimes they used to be almost perfect. Nowadays, it seems like they're a little bit sloppier, and they can be $1 off here and there. Now, we go and we take that 130, okay? I'm sorry, we look at $13.55. So we look at we're looking at the 60-65 call and put. Now let's look at the 75-80 call spread at the same time. So where is that? The December calls. Where are they? There's the December calls, and we're looking at the 75-80, and I'll explain why we're looking at that. The 75-80. So the 75 call right there is at 665. 665. And the put, I'm sorry, not the put, the 80 call is at 450. All right, so now that comes out to be $2.15. All right, now we take that $2.15, and then we take a look at the 60-65 put spread, which was at $1.41. We add them together, and that comes out to be $3.56. So in other words, if you sold those two spreads, and I'll explain the margin to you in a second, or many seconds down the road, but we'll explain the margin. All right, so that means the most you can lose is $1.44. Okay, you possibly can make $3.56. You can possibly lose $1.44. It's over 2-to-1. It's okay. It's not the most explosive, but let's take a look at something that I showed you a few seconds ago, and that is looking at the 170 call and the 170 put. So there's the December 170 call deck, and that's being quoted at 925. The 170 put is being quoted at, let's see, where is the 170 put? The 170 put is being quoted at 730. Okay? So what they're saying on this, on the December spread, they're saying that the stock could move $16.55. All right? So in other words, you would go and set up, you would take the $17 and subtract it, and that would be from 170. All right? And that means that if you go and sell those spreads below that, you have a high percentage of winning. So what you do is you go and look at the, in this case here, $16.55 comes out to basically is, or say 17, it'd be 153. So you're looking basically at the 150, 155 put spread, and the so you add that on top of it, so it's like the 180, 85 call spread. Okay, we look at those. Now we look at the premium. That's like a $15 premium right now. In other words, with the stock trading at basically 170 and the option spread reflecting $16.55, there's over $16 in premium in there. So some traders go out, and what they do is they sell the wings. That's what they call the wings, like the in this case here, the 150-55s. Let's see what the pricing of that is. So I don't even know if they have a 155 put. Yeah, they do. Okay, so December, they have a 150-55 put. That spread is at 75 cents on the put side. And on the call side, that spread is where is it at? 80.85. Right there, you can see that is $1.71, 280 versus 450. So it's $1.71. Okay, so $1.71 versus and 75 cents. Basically, it is $2.46. So you go and sell that spread at $2.46. You're risking $2.54. The options, the straddle at 170 is telling you that it's going to land just in a profitable zone by about $1. Because it's at 16.55. Now, when you trade spreads like that, and Dukascopy calls it binaries. When you trade spreads like that, what happens is that your margin shrinks dramatically. So in other words, if you're risking $2.46, they're only going to margin you on $246. So you have to have $246 as a margin compared to if you sold just one of the calls without covering a call, being short calls and a short and a put, they charge you maybe $5,000 in margin. You go and do it in a spread or a binary, the way Dukascopy does binaries, and all of a sudden that margin shrinks down to a couple $100 for almost the same identical return, say. And so that's how margins, you can build spreads where you're only risking, risking, $300 or $400 with the potential to make, like $3,000 or $4,000. There's all kinds of combinations. You can go directionals, do directional spreads, and put on risk like that. And so, when understanding the basic mechanics of margin in options, when you understand the basic option margin, you can have incredibly low risk with incredibly great gain. Okay, and then what happens? Everybody knows if you keep on doing that over time, there's a young fellow I've been helping out with his options over the last 9 months. He told me last weekend he's up 161% on low, what I call moderate risk, very minimal risk. He's doing buy rates, which is a little bit more riskier than this, but he's buying dividend stocks and doing buy rates in them. And every week he's doing weekly options, no less, and selling them and letting them get exercised out, and he takes the premium and so forth. Every so often he gets a little underwater, nothing major, because he does about 6-7 different stocks. And so what we're going to do is, I can see we've chewed through 46 minutes here. I'm going to try to find a product that's live this time of the morning for us so we can look at the option premium and see how the mechanics work. But this was a 46-minute conversation about the mechanics of options, and the delta tells us how much the option premium will move. The last price is showing the close of the option last night, and then we can look at the difference between the stock price itself and the option. You can see right now the stock is trading at 169.70 offer, at 169.60 bid, and so we're able to have realistic conversations. Let's see. So on that 160.65 spread, depending if you're selling it, the margin could be under depending on how far out month-wise, it could be just a few $100s in margin. That's it. If you're buying it, it could be even less. If the spread's like $1 and change, you're just buying it for $1. There's nothing, no more no risk, no margin more than the money you put out. So, does that answer any questions? And like I said, I'm going to work at finding something before I start the webinar, and find something that's live that we can follow. If everybody's comfortable and has no questions now from this deep, long conversation about options, we'll go take a quick look at all the products and see what they've been doing for the last 24 hours. How's that? Everybody okay with that? And we will get deeper into this, and I will go over that whole strategy again. You'll be able to watch it on the webinar, and we'll get into it. Once we get premium up there, we can see the bid and offer. We can make these strategies even simpler. But right now, just looking at the static, we can still come up with spreads and concepts, and how traders look at straddles, and they decide how much risk there is in a product, and then we can take a look at a product that's getting ready to expire. Like having a dividend, and how or an earnings announcement, and see how the option traders are pricing the market. Usually they're pretty close. In other words, let's say it's priced tomorrow. This thing's going dividend, or earnings are coming out tomorrow, and right now that straddle is trading at $16.55. Well, when it comes out, you can almost guarantee it'll be 85 to 95% right, if not better. So in other words, the stock might move $17, it might move $17.50, or it may fall 16.5 or 17 or $17.50. It's very close. The straddle really reflects where money is lined up. All right, we're going to close this today, and if there's no other questions about that, we will jump over to a quick look of what our math is showing us and everything. So let's go over to let's see, where did we go? Let's go look at the euro. We'll go through some currencies real quick. We'll just look at them, and we won't get too fancy. You can see the euro is trying to lift up a little bit, still in a daily sell on a weekly. Over next is the cable. Let's see. Hey Doc, is it Apple call 16? Okay, that's the same question a while ago. Okay, Apple. I'm sorry, Apple, not Apple. GBP. You can see it's up for the day, still in a sell. It's trying to climb right there, and it's still in a weekly sell. You see here the Euro GBP. Do we look at that? No, we don't. We go down. We go like this. We go to the Swiss. Swiss, you can see right there, moving down a little bit, gaining against the dollar, and then a weekly buy and a daily buy just curving over. You can see right here, the yen, they took it up to our target zone yesterday at the high now is 149.71. I was talking about making it into the 70s, maybe touch 50. But we finally got to that point ever since we went into the weekly buy here down at 142-ish. Now we just watch and see what the math tells us. Looks like we've been in a daily buy and a weekly buy all month, and it's not stopping at this point. It looks like. Over here we go to the Turkish lira. Turkish lira trying to lift, but in a daily sell for 3 days and in a weekly buy for 3 weeks. Over here we see the South African rand. You see that it's in a buy for the last couple of days, moving up, and gold has been moving down. And you can see the weekly is trying to get into the weekly buy. Now let's go over and take a look at gold. We'll go through the metals real quick just to give you a flavor where they're at. There's gold. You can see gold is down just a little bit more today. That's with the South African rand rising and losing against the dollar and playing with the weekly there. You see the silver doing the same exact thing in a daily sell for a few days. And you can see the weekly being pressured also. And it's going to go into a weekly sell if it stays like this. Copper doing an interesting lift here this morning, and the weekly's trying to turn up. I don't know if that's because China is trying to prop up the markets or what, but that's what seems to be happening. And last but not least, we've moved to the January platinum now, and that's the front month, and you can see it's trying to lift this morning, but it's been in a sell since back here. What's that, 6 days ago? And it's trying to, it's well below the weekly, where it's going to close in a weekly sell. 99% chance it closes in a weekly sell when it's that low down. And so it's been telling us that since right here. I guess you could say right there. All right, from there, we go over to the energy sector when we take a look at crude oil. Crude oil pierced the $94 area there yesterday. Today now the high is $95.03. And that's the spot month. And let me just throw Canadian up on the screen real quick. The CAD right there. CAD has been trying to climb a little bit, which is kind of odd. Because, with the way oil is gaining, you would assume it would have been going down like this, but it's not. That whole country is upside down with that crazy politics up there, like the way South Africa is. And so we go over to, we've got I guess you go to the back month. And let's put Brent up on J4X too at the same time to give you a flavor of Brent. Where's Brent at? It's around here somewhere. There it is. No. Where'd Brent go? Why am I not seeing? Oh, there it is. There's Brent right there. And let's get this out of the way. And let's put Brent up on. Let's see if I can find Brent here. Where's my Brent? It's a B something. F? No, maybe. Nope. BZF, I think, is the bond. There it is. There's Brent. You see Brent is in a buy for 2 days there. Our weekly buy has been there for a while. And you can see that pressure on it. Then we'll look at natural gas. Right there. Natural gas is trying to lift. It's been in that weekly sell for a while. And let's see. Please explain the... margin. Okay. Please explain the binary a bit more than that more than. Okay, so let me just put a 1 in there so I can see what you said. I think it's binary. Yeah, binaries. What binaries are is they're spreads. We'll go through that tomorrow because Dukascopy does binaries. So we'll go through and it's like buying the 60. It's like buying the 160 call and the 160 put and selling the 165 put, or vice versa, buying the 165 put and selling the 160 put and trying to make it cheaper. And then you're playing for a limited win, but it's a very lower risk that way. They're good tools for news coming out, things like that. And let me think what else. And it's the same thing on the call side. You can buy a 170 call, sell a 175, and make it cheaper for you to be long, and your risk is lower. And vice versa. You could go sell the 175, buy the 175 call and sell the 170 call and try to sell the premium, hoping that you're shorting it, but you're limited risk. And that's what a binary is. All right, traders, we're out of here. It turned into a whole option explanation. We will find something that's, I don't know if it's that important to find something trading, but I would like to show you something trading live. So I'll work on that. So this is Doc from North America, and we will catch you all tomorrow, same time, same channel, at Dukascopy here. So, happy trails to you until we meet again tomorrow, TGIF. Happy trails to you, to all our trading friends. Later, traders.